Hey everyone, and welcome back to Safe, Simple, Sound, College Planning Edition. I'm your host, Sam, and this is the podcast where we focus on helping you make financial decisions that are, well, safe, simple, and sound. We believe that understanding your options is the first step towards seizing financial control, and that's exactly what we're aiming for today. Today's episode is all about leveraging lifelong learning for potential tax savings education. We're diving deep into a valuable, but sometimes overlooked opportunity, the Lifetime Learning Credit, or LLC tax credit. Our discussion draws insights from an excellent, detailed guide we reviewed specifically explaining this education tax credit. Link to the guide is available in the show notes. This guide really highlighted a few key things for me. First, the incredible flexibility of the LLC. It's not just for the first 4 years of college. It can apply to courses taken purely to improve job skills, for graduate school, or even if you're studying part-time. Second, it's a credit, not just a deduction, which directly cuts down the tax you owe, potentially up to $2,000 per tax return. And third, a crucial point we'll unpack, is that it's a nonrefundable tax credit, which impacts how it works based on your tax situation. Understanding these nuances really ties into our core belief here at Safe, Simple, Sound, that knowing your financial choices empowers you. Making sense of credits like the LLC helps you make informed decisions about investing in yourself or your family's education while managing the costs effectively. Our goal today is to demystify the Lifetime Learning Credit, turning potentially confusing tax rules into clear, actionable information. So if you, your spouse, or a dependent has been hitting the books, this episode is definitely for you. Let's get started. Now, first things first. When you hear about education costs and taxes, have you ever really stopped to think about the potential benefits? Maybe you've heard terms thrown around, but haven't looked into the details? That's what we're doing today. The government actually wants to encourage learning, which is why programs like the LLC exist. And here's the most important thing to understand right off the bat. The Lifetime Learning Credit is a tax credit. Why does that matter? Well, think of it this way. A deduction lowers the amount of your income that gets taxed, which is good. But a tax credit, that's like a direct coupon against the actual tax you owe. It reduces your tax bill dollar for dollar. So, understanding that difference really highlights how valuable a credit like the LLC can be. It's a more direct path to tax savings. Okay, so what kind of learning does the LLC cover? This is where it gets really interesting and flexible. Unlike some other education credits that are mainly focused on the first few years of a traditional undergraduate degree, the LLC has much broader applicability. We're talking about courses taken towards an undergraduate or graduate degree. We're talking about continuing education requirements to maintain a professional license. We're even talking about courses you take simply to acquire or improve job skills. Maybe a coding bootcamp, a project management certification course, or specific technical training. As long as it's at an eligible institution, it might qualify, even if you're well past your first 4 years of college. That broad scope is a huge plus. So, how much are we talking about? Let's get into the calculation basics. The LLC follows a straightforward 20% rule. You can claim a credit equal to 20% of the first $10,000 you spend on qualified education expenses. That means the maximum credit you can get is $2,000 per year. Now, a key detail here. This limit is per tax return, not per student. So even if you have multiple people in your household taking qualifying courses, the maximum LLC you can claim on that single tax return is $2,000. If you spent, say, $5,000 on qualifying tuition, your credit would be $1,000. If you spent $15,000, you'd hit the cap and get the $2,000 credit. Finally, there's one more crucial characteristic to understand. The LLC is a non-refundable tax credit. What does that mean? It means the credit can reduce the amount of tax you owe all the way down to zero. That's fantastic. However, if the credit is actually more than the tax you owe, you don't get the leftover amount back as a refund. For example, if your calculated LLC is $1,500, but you only owe $1,000 in taxes before applying the credit, the LLC will wipe out that $1,000 tax bill, but you won't get the extra $500 back. It's designed purely to reduce your tax liability. So, let's quickly recap the basics of the lifetime learning credit. It's a valuable tax credit, directly reducing your tax bill, offering real tax savings education benefits. It's super flexible, covering degree programs, continuing education, and job skills courses beyond the typical undergrad years. The calculation is 20% of the first $10,000 in qualified education expenses, capped at $2,000 per tax return. And remember, it's a non-refundable tax credit, powerful for lowering taxes owed, but no cash back beyond zeroing out your bill. Now, I want you to take a moment and think. Have you, your spouse, or maybe a dependent you claim taken any courses recently? Maybe finished a degree, taken a professional development workshop, or started a certification program? Could those expenses potentially qualify for the lifetime learning credit and lead to some tax savings? It's definitely worth reflecting on. In our last segment, we got a good handle on what the lifetime learning credit actually is. That awesome tax credit designed to help with the costs of ongoing education and skill building. We talked about how it's a credit, not a deduction, meaning it directly slices into the tax you owe, potentially up to $2,000 per return. Now, the big question that follows naturally is, am I actually eligible? That's exactly what we're digging into in segment 2. Are you eligible? Unpacking LLC requirements. Because knowing the benefit exists is great, but knowing if it applies to you is where the rubber meets the road, right? So, let's break down the main checkpoints. First up, the core eligibility. This is the foundation. Generally speaking, you can potentially claim the lifetime learning credit if you paid qualified education expenses for an eligible student attending an eligible educational institution. And that eligible student can be yourself, your spouse if you're filing jointly, or a dependent you claim on your tax return. Pretty straightforward start. Got to pay the bills for learning. Now, where it gets interesting is defining an eligible student for the LLC. This is much broader than some other education credits you might have heard about, like the American Opportunity Credit or AOTC. For the LLC, an eligible student is basically anyone enrolled in at least one course at an eligible institution. That's it. They don't need to be pursuing a degree, they don't need to be enrolled half-time, and there's no limit based on their first 4 years of college. This flexibility makes it a fantastic potential tax credit for graduate school or for part-time students just taking a class here or there to upskill. Think about it. Maybe you're taking a night class in graphic design to boost your resume, or perhaps pursuing a master's degree part-time. Or maybe you're taking a single course at a community college to learn a new trade skill. These could all potentially qualify under the LLC's broad definition. What other kinds of learning might fit here that people often overlook? Maybe a certification course required for your job, or even a single university class taken just for personal enrichment that happens to improve job skills. The key is that broad scope. Okay, eligibility sounds pretty open so far, right? But like most things tax-related, there are some crucial exclusions. These are the situations where you cannot claim the LLC even if you meet the basic criteria. Pay attention here. You can't claim it if your filing status is married, filing separately. You can't claim it if you can be claimed as a dependent on someone else's tax return. Your income might be too high. We'll get to the MAGI limit education credit in just a second. There are rules for non-resident aliens, and a big one. You cannot claim both the Lifetime Learning Credit and the American Opportunity Credit for the same student in the same tax year. You have to choose one. Let's talk about that income limit because it's a common hurdle. The LLC has income limitations based on your modified adjusted gross income, or MAGI. Think of MAGI as your adjusted gross income from your tax return with a few specific deductions added back in. For 2024 taxes, the credit starts to phase out, meaning it gets reduced if your MAGI is between $80,000 and $90,000 for single, head of household, or qualifying surviving spouse filers. For those married filing jointly, that phase-out range is $160,000 to $180,000. If your MAGI is $90,000 or more, or $180,000 or more, you unfortunately can't claim the credit at all. Understanding this MAGI limit education credit is critical. You can see how these income phase-outs might even influence financial planning, right? Maybe Timing a large income event like selling stock could impact your eligibility in a year. You also have significant education expenses. Finally, there's a neat little rule about attribution. Let's say you claim your college-age child as a dependent. If your child pays their own tuition, or maybe grandma kindly pays it directly to the school for your child, the IRS treats those qualified education expenses as if you, the person claiming the dependent, paid them. This means you can potentially use those expenses to figure your lifetime learning credit. So, let's quickly recap the key eligibility hurdles for the lifetime learning credit. 1. Did you pay qualified education expenses for an eligible student institution? 2. Is the student eligible under the LLC's flexible definition? 3. Are you clear of the major exclusions? 4. Is your MAGI below the threshold? 5. Remember the attribution rule if a dependent or third party paid. Whew, that covers the who and the if. It might seem like a lot, but breaking it down helps clarify whether this credit is potentially on the table for you. So, here's your action item for this segment. Take a moment after this to check your filing status and estimate your modified adjusted gross income. See where you might fall relative to those $80K to $90 single or $160K to $180K joint thresholds for the lifetime learning credit. Knowing this is a huge first step. In our last segment, we dove into who can potentially claim the lifetime learning credit, looking at things like eligible students, dependents, and those all-important income limits. Remember those MAGI phase-outs we discussed? Hopefully, you've got a clearer picture of whether the LLC might be on the table for you based on your situation. But knowing you might be eligible is only half the battle, right? The next big question is, what specific costs actually count towards calculating that potential $2,000 credit? That's exactly what we're tackling in this segment. What costs count? Qualifying expenses and institutions for the LLC tax credit. Getting this right is key to maximizing your potential tax savings education benefits. So, let's break down what the IRS considers qualified education expenses for the lifetime learning credit. First up, the main category, tuition and fees. This is pretty straightforward. Think of it as the cover charge or the entry ticket. It's the amount required for you to enroll in or attend the eligible educational institution. If the school mandates a specific fee for you to be in that seat, learning that skill, it generally counts. Now, here's where it gets a little trickier, and where folks often stumble. Books, supplies, and equipment. For the lifetime learning credit, these only qualify if two conditions are met. 1, they must be required for the course. 2, you must be required to pay for them directly to the educational institution as a condition of enrollment or attendance. Think about it this way. If your university requires you to buy a specific lab kit and bills you for it through your student account, that cost might qualify. But if the professor just recommends a textbook and you buy it from Amazon or a used bookstore, even if it's essential for the class because you didn't pay the institution directly for it as a requirement, that cost wouldn't count towards the LLC. This is a common pitfall, assuming all required materials count regardless of where you bought them. For the LLC, the paid to the institution part is crucial for books and supplies. Next, let's talk about eligible courses. What kind of learning actually qualifies? The LLC is beautifully flexible here. The course needs to be either part of a post-secondary degree program, like working towards your bachelor's, master's, or PhD. Or, and this is huge, the course can simply be taken to acquire or improve job skills. This is fantastic news if you're looking for a tax credit for continuing education, maybe getting a professional certification, taking a coding boot camp, or attending workshops to level up in your career. Unlike the AOTC, you don't need to be pursuing a formal degree or be enrolled half-time. Okay, so you've got the potential expense, you've got the right kind of course, but where are you taking it? We need an eligible educational institution. What does that mean? Generally, we're talking about accredited colleges, universities, vocational schools, and other post-secondary institutions that are eligible to participate in the U.S. Department of Education's student aid programs. Think federal student loans, Pell Grants. If the institution is approved for those, it's almost certainly an eligible institution for the LLC. How can you verify? Usually, the school's website will mention its accreditation, or you can check resources like the Department of Education's database of accredited schools. If it's a legitimate, accredited post-secondary program, you're likely good to go. An informal workshop run by an individual likely wouldn't count. Finally, a really important point: avoiding double dipping. The IRS is clear on this. You can't use the exact same educational expense to claim multiple tax benefits. So if you pay $5,000 in tuition, you can't use that same $5,000 to claim the lifetime learning credit and also deduct it as a business expense if you're self-employed. Similarly, you can't use the same expenses to claim both the LLC and the AOTC for the same student in the same year. And you can't use expenses paid with tax-free funds from a Coverdell Education Savings Account or a qualified tuition program to also claim the LLC for those same dollars. It's like trying to use the same coupon twice at the grocery store. It doesn't work. You need to allocate your expenses appropriately if you're using multiple programs or benefits. So to recap this segment, qualified education expenses for the LLC primarily mean required tuition and fees. Books and supplies only count if required and paid directly to the school. The courses can be for a degree or job skills, making it great for tax credit for continuing education. The institution needs to be accredited and eligible for federal student aid. And crucially, no double dipping allowed with other tax benefits like the AOTC or business deductions for the same expense dollars. Okay, that was a lot of detail, but essential stuff. Your action item from this segment is this: start gathering your proof. Dig out those tuition statements, especially Form 1098-T if your institution sends one, and find any receipts you have for books, supplies, or equipment that you were required to purchase directly from the institution. Having these documents ready will make it much easier to calculate your potential qualified education expenses when it comes time to figure out the credit. In our last segment, we dug into exactly what kinds of costs count as qualified education expenses for the lifetime learning credit and which schools and programs fit the bill. It's great knowing what qualifies, but now comes the practical part. How do you actually claim this credit? And crucially, how does it stack up against that other education credit you might have heard about, the American Opportunity Tax Credit? So, let's dive into segment 4. Claiming the LLC and understanding the key differences from the AOTC. This is where the rubber meets the road when it comes to getting those tax savings on your return. First up, the how-to. Actually claiming the lifetime learning credit is pretty straightforward on the form side. You'll need to fill out Form 8863, which is specifically for education credits. Both the LLC and the AOTC live on this form. Once you've calculated the credit amount there, you attach Form 8863 to your main Form 1040 tax return. The credit itself then flows onto Schedule 3 of your 1040, directly reducing your tax liability. Simple as that. Fill out the form, attach it, see the savings. Now what about paperwork? The key document here is usually Form 1098-T, the tuition statement. Your eligible educational institution typically sends this out early in the year. It shows amounts paid or billed for tuition and related expenses. While the IRS generally expects you to have this form, there are exceptions. Maybe the school wasn't required to send one for your specific situation, like if your courses didn't offer academic credit. If you don't get a 1098-T but know you paid qualified expenses at an eligible institution, don't panic. You can still potentially claim the credit, but you absolutely need solid proof of enrollment and payment. Think canceled checks, bank statements clearly showing tuition payments, and registration confirmations. Keep those records meticulous. Okay, this next part is critical, and it answers one of the common questions. Why is it critical to understand the differences between the LLC and AOTC before filing your taxes? It's critical because you can only claim one of these education tax credits per student per year. Choosing the wrong one could mean leaving money on the table or claiming a credit you weren't actually eligible for. So let's break down those AOTC versus LLC differences. Difference number 1 is scope and duration. Think of the AOTC as being targeted and time-limited. It's generally for students in their first 4 years of undergraduate education who are pursuing a degree or credential and enrolled at least half-time. After those 4 years, AOTC eligibility runs out for that student. The lifetime learning credit, on the other hand, is much broader and lives up to its name. There's no limit on the number of years you can claim it. It covers undergraduate, graduate, and even courses taken just to acquire or improve job skills. No degree requirement, no half-time enrollment rule. Taking a single evening class to boost your professional skills? That could qualify for the LLC, but likely not the AOTC. Pursuing your master's degree? That's LLC territory. See the difference? AOTC is like a specific scholarship for early undergrads. LLC is more like ongoing tuition assistance for lifelong learners. Difference number 2 is refundability and the amount. This is a big one financially. The AOTC offers a higher maximum credit, up to $2,500 per eligible student. And here's the kicker, up to 40% of the AOTC is refundable. That means even if you owe zero tax, you could potentially get up to $1,000 back as a refund. Now compare that to the lifetime learning credit. Its maximum is lower, up to $2,000 per tax return, regardless of how many students qualify on that return. And crucially, the LLC is non-refundable. Think of it like a coupon that can reduce your bill to zero, but the cashier won't give you cash back if the coupon is worth more than your purchase. The LLC can wipe out your tax liability, but it won't generate a refund on its own. So, how do you make the choice? If a student qualifies for both the AOTC and the LLC in the same year, maybe they meet all the AOTC criteria in one of their first 4 undergrad years, you generally want to choose the AOTC because it offers a larger potential credit and that valuable refundability feature. However, the LLC is incredibly useful for situations the AOTC doesn't cover. Graduate school, taking courses less than half-time, students beyond their 4th year of undergrad, or those career-enhancing courses that aren't part of a formal degree program. This brings us to our second common question. What steps should someone take if they receive a Form 1098-T but aren't sure if they qualify for the LLC or AOTC? First, review the details on the 1098-T. Check the boxes indicating enrollment status. Then carefully compare the student's situation against the rules we just discussed. Ask, is this one of the first 4 years of undergrad? Is the student pursuing a degree? Enrolled at least half-time? If yes to all, AOTC is likely the better option. If no to any of those, or if it's for graduate studies or job skills courses, then the lifetime learning credit is probably the one to explore. Don't guess. Let's do a final recap. Claiming the LLC involves Form 8863. You'll generally need a Form 1098-T or equivalent proof. The AOTC versus LLC distinctions are crucial. LLC is broader in scope, but offers a lower, non-refundable credit, while AOTC is more limited but offers a higher, partially refundable credit. You have to choose one per student. Ultimately, the Lifetime Learning Credit is a fantastic tool designed to make ongoing education and skill development more financially accessible, directly linking tax savings with your personal and professional growth journey. So, what's your next step? If you think you might qualify for either of these credits, definitely dig deeper. Your best bet is to explore the official resources. Head over to the IRS website at irs.gov. They have detailed information and interactive tools. Also, check out IRS Publication 970, Tax Benefits for Education. It has tons of examples covering various scenarios. Use these resources or consider consulting with a qualified tax professional to pinpoint the best education tax credit for your specific situation. Don't leave potential savings unclaimed. All right, everyone, that brings us to the end of our deep dive into the Lifetime Learning Credit. We covered a lot of ground today, aiming to make this valuable education tax credit feel a bit more, safe, simple, and sound for you. We walked through exactly what the LLC tax credit is, that potential $2,000 boost from leveraging your learning for tax savings education. We looked at who qualifies for the Lifetime Learning Credit, exploring the surprisingly broad eligibility, and crucially, those MAGI limit education credit rules. We also clarified what counts as qualified education expenses and touched upon how to claim the Lifetime Learning Credit using Form 8863. I think 2 key takeaways really stand out. First, the LLC's incredible flexibility. It's a fantastic option if you're looking for a tax credit for graduate school or a tax credit for continuing education just to boost job skills. Second, Understanding that critical AOTC versus LLC difference, especially that the LLC is a non-refundable tax credit, is vital when deciding which credit works best for your tax situation. Knowing these details truly helps you make informed choices about financing education. Thank you so much for tuning in and spending your valuable time with me here on Safe, Simple, Sound. Your commitment to understanding your finances is what this podcast is all about. If you found this helpful, please check out our show notes. We'll have links to resources like IRS Publication 970 and more details on Form 8863. And if you enjoyed the episode, consider leaving us a review, sharing it with someone who might benefit, or hitting that subscribe button so you don't miss out on future discussions. Until next time, stay informed, stay empowered, and keep making those sound financial choices. This is Sam, signing off.